How are we going to do this? How do we find stocks that will make money in the stock market? Right? And that is always a question that I was asking, because it is not the most obvious thing all the time. Right? How do we find stocks? How do we know where do we get these stocks? What's the best way to go about it? Right? Why do we, is there a secret somewhere? Is there a secret to this process? And let me explain to you. I will tell you, since the market is up today, as you could see, the market is doing great. The market is smooth, and the reason the market is doing great today is for the simple reason is that the so-called tariff war, because that's the latest. The tariff war is basically not happening between China and the U.S. So let's dive into this, and then let me explain to you not what the secret, but at least understand what drives the market, right? Because that's the big question. What drives the market? How do I know? If the market is going to go up or down? How do I know if there's going to be a stock market crash? How do I pick stocks? And why you need to do it, you have no choice, because inflation will eat away at your capital. Therefore, you need to understand what's going on. So question number one, what drives the market? Well, it's very simple. Look what's happening right now. On Friday, the market went down because, and not a insignificant amount. It went down 2.5% simply because China and the U.S., in particular the U.S. administration essentially stated that it would apply 100% tariffs on everything Chinese coming from China. What does that mean? Well, it essentially means that what you're having is you're closing China, and a trade war essentially, and that's not good. Wait. So no one knew of that possibility? If you subscribe to my channel and you look at some of my recent live and videos, I've been telling you that essentially, they have been at it for a while now. The U.S. and China, they've been at it since the beginning of the year, where they've been trying over and over and over to arrive at some sort of an agreement. At the heart of this agreement, essentially what we are looking at is a rare earth mineral. So it's not, I'm assuming you all know what it is. I'm not going to insult your intelligence by telling you about rare earth minerals, but it's not rare, first of all, but it's very valuable and it's very important. Because everyone need rare earth minerals to run a bunch of things. Check out my previous videos. So essentially, we knew that this was going to be the case. But still, everyone was surprised. Everyone was surprised that, what's going on? There's a trade war, so the market collapsed. And then, and this is where it becomes interesting, over the weekend, on Monday, the U.S. administration essentially said, you know what? I think we're going to be able to get along. And the market went back up. And then on the day after, China started again thinking that they could win this war of words with the U.S. administration by double downing on their commitment to prevent everyone from, basically shutting down the entire world with rare earth mineral. And the market went down again. Okay, so you want to make money? Well, on Sunday, what you should have done, well, actually on Friday, you should have bought calls, and I recommend that strongly if you want to make some easy bucks. And the next time someone talks about the trade war and the market drops down, buy yourself some short-dated call because, frankly, neither side can afford a trade war. Okay. Therefore, it's going to get back up ultimately, very, very shortly after. And why? Well, because the market right now, the market wants to go up. And that's another theory that you need to realize is that essentially the market is going up because of the influx of funds. It's very simple. It's very scary. Well, where's the money going to go? The money has to go somewhere. The only reason that the market is going to go down, as was the case on Friday, is that you're going to have a surprise. The market hates surprises. But the win, this market, do not be in the FOMO, the fear of missing out camp. You want to access it as soon as you can, because the market is pushing and pushing because of the influx of cash going in. Where's the cash coming from? Listen, all the money that's going 401ks has to find a home, right? And the administration is the Fed is also flushing the market with liquidity. There's liquidity everywhere, so it's pushing it. The only one you're going to have a drawback is then when that liquidity dries up. And the only reason it dries up is when there is a surprise. Like on Friday, they said, whoa, what happened? All right, let's go back in. And as you could see, the market is up everywhere. And frankly, it behooves you to look at outside the U.S. because as you could see, year over year, what am I looking at here? We're at 14% in the U.S., but Italy is up 21%. Okay, so if you're not in Italy, you're missing out. You're missing out some fun. Anyway, so, and you need to listen to me on this one. So essentially, the market is going up because money is going into the market. So at the end of the day, so how do I make money? Well, two things you need to do. First, make sure you pick stocks or you pick opportunities that no one is looking at. And right now, at the end of the day, no one is really looking at, it's changing, but small caps. So you want to take a look at small caps. No one is really looking to understand quantum computing either. Forget Bitcoin, that's already done. Forget NVIDIA, that's already done, right? You want to take a look at what no one is looking at. And right now, these are the one that no one is looking at. Well, at least not that many, and it's not a trend yet. It's changing. Okay. Then what you need to worry about is what could potentially take away that liquidity. Because the only time you have a crash, the only time you have something happening is, first of all, when no one is talking about it, meaning no one is talking about crash words anymore, or everyone is talking about the AI bubble. As long as people are talking about that, you'll be fine. It's just when they don't talk about it and they assume the market is going to go up and up and up, that's what you need to worry about. But more importantly, you need to worry about the lack of liquidity. Now, for you to have no liquidity, some major event needs to occur. In 2008, for example, there was like no liquidity. Nobody wanted to get involved and invest their money because they didn't know what was going on. The market was literally, forget the market, the economy, the financial system in the U.S. was literally dropping, disappearing. To 2020, COVID. What the heck is going on with COVID? What are we doing? What are we doing? We can't go in the streets anymore. Things like that. Right now, that's what you need to look for. And this is why this channel is very important to you, because what this channel does is that it looks for black swan. They look for, what else could go wrong? Because that's what you need to worry about. You need to start worrying about what is going to be wrong as opposed to chasing chasing profits, right? Because it's not that hard to chase it right now. I mean, if you subscribe to my channel, well, actually, if you're a member, you will see my portfolio. I posted it again today, and you will see that I'm up on all the stocks except one because it's a Bitcoin stock, but all of them are up. I'm at 150% on some of the rare earth gold kind of stocks. Okay, so that is not the problem. The problem is that you need to worry about is what could go wrong, and what could go wrong is what you need to look for. And this is what this channel does. Right now we're looking at the China/US tariff quote unquote war. We are looking at what's happening with Epstein, believe it or not. Yeah, because Epstein is picking a dent to the Republicans right now. And they've been delaying the release of the actual undated information. They said that there's no need to release that much information. The Democrats are saying, no, that's not true. They're lying. And because you have a government shutdown right now, and this is another one of those things that we're following, nothing is going to happen until the government opens up again, because they're holding up one boat. And take a look at the video on that. They're holding up one boat that basically is preventing them from actually releasing the information having to do with Epstein, which hasn't been released yet. So at the end of the day, what you're looking for is what could go wrong. That could go wrong. The tariff war could go wrong, although I'm not concerned about it, but we still need to understand and analyze it, because this channel is about analyzing. Now, so then what do we do? Well, what you need to worry about is, and you could profit from it if you time it right. After all, Spitznagel made 4,000% by hedging the fat tail in the options market because he was seeing that we're going to have a problem with COVID. 4,000%. So what could go wrong right now? What is the most dangerous thing that no one is talking about and that you need to worry about? Well, that one has to do with the debt, but specifically having to do with, and the debt really is tied into what's going on right now with the shutdown, and also what is happening with the situation with the debt itself, right? Because and the tariffs, obviously. What I mean by the tariffs is right now, those two things are going to feed the debt in a positive or a negative way, right? Right now, what's happening with the Supreme Court? The Supreme Court is in process of figure out whether or not these tariffs are legal or not. And then you've got the ongoing situation with the shutdown, government shutdown. Now, the longer these things last, at some point, someone is going to say that you need to get your house in order. And when I mean someone, the rating agencies, and if you don't get your rating, your house in order, I will actually downgrade you, and it's going to cost you more money to finance a $37 trillion, and that's going to create a bubble, because that's going to become very difficult to maintain. And then on top of that, you've got the federal, you've got these guys over at the Supreme Court, and they're basically looking at whether or not this is legal or not. Because if it's not legal, if they find out somewhere before by the end of the year, if they find out by the end of the year that these tariffs are not legal, what do you think is going to happen? You got to give the money back. Now, right now, that money from the tariffs are going straight inside the Treasury. For what? To pay for the debt. And frankly, for you to pay the debt, you need the money from the tariffs. And the market keeps on going higher. So if for some reason they say that the tariffs are illegal, then what's going to happen? You're going to need to give the money back, and that money that you thought you were going to get to pay down the debt or the interest is not there, putting more pressure on the amount of debt. The issue that you need to realize is that the biggest problem that the U.S. has, this bullet that they keep carrying around, and anything affecting that bullet is what you need to worry about, is they owe $37 trillion worth of debt. So that's what that anything impacting that debt, making it more expensive or more difficult, is going to be a problem. Now, once you know that and you understand that risk, then you say, well, how do I pick a stock? Where do I find those stocks, right? Well, first of all, what you need to look for, number one, low debt. And what I mean by low debt, what does that mean? Well, essentially, you want to take a look at the amount of money that the EBITDA of interest expense. And that is basically, you want something that's in the 10 to the 12. I will, for my members, I will give you some of the names that I came up with. Right? Then you want low debt to EBITDA, low debt to cash flow, maybe 2 times, 3 times. Then you want to see growth. That's important. Then you want to see a low valuation. I will use the PE ratio as a valuation metrics, but frankly, that's what I would use to begin with. But then you also want to make sure that you need some growth. And where's the growth right now? Well, the growth right now is anything having to do with rare earth minerals, gold. I'm not talking about buying gold. I'm talking about gold stocks, and I'll make a few recommendations. So you want anything having to do with rare earth mineral, anything having to do with gold, anything having to do with quantum computing, because that's the next big wave, and AI. The problem is with AI, everybody has bought it. Right? We're full of AI stocks, so that's going to be tough to find. Rare earth mineral, well, there's a couple of them. It's just that they have been overvalued. And one of the names that I propose is up 150%. So, pick your winners and wait until there's a market pullback, obviously, or keep investing every month and then you average out. That's also a possibility. And at the end of the day, what you want to do, you want to be able to understand what is driving the stock market. And what drives the stock market are expectations. Do not fall for the idea that says, hey, these are my recommendations. This stock is going to double and triple. No one can predict the stock market. Do you know that the Earth is 14 billion years old, right? And we have been around for the past 300,000 years. So if you were to do a clock, there's a point to this. Listen to me. We are about, if the entire world history was a 24-hour clock, we would fit in the last 18 seconds. So we've been here just very, very recently. Lots of things have happened way before us, and we were not part of it. The odds of Earth, the odds of humans walking the Earth is 10 to the power of 48. Check it out. 10 to the power of 120. The odds of the 1987 stock market crash was 10 to the power of 50. Because it's all about odds. It's all about luck. It's all about understanding physics, believe it or not, if you want to understand stock prices. So, back to my point, for you to get an idea of what 10 to the power of 120 is, 10 to the power of 80, which means 10 with 80 zeros, one out of 10 to the power of 80. And by the way, the odds of you winning the lottery is 1 to 350 million. and that only has 7 zeros. We're talking 90 zeros. Okay? If you take a dot and you throw it to your universe and you need to find that atom that was creating everything, it will be 10 to the power of 80, and you got it. That's almost impossible. So we need to realize that there's no way this has to do with luck. Something created it, something initiated, right? There's something that caused things to happen. It's the same thing with the stock market. It's not luck. Oh, I made money today. Wow, you're lucky. No. You just need to know what's going on. You need to understand, what's driving it. And that's what these people out there every day trying to find out. They're trying to find out, what's driving the market. And what's actually driving the market is the fact that we don't know. Because if we knew, nobody would be losing money in the stock market. But we do know. What we do know, there's a fair amount of risk, and there's a fair amount of quote-unquote luck, which we don't understand. Luck is what you don't understand, involved. So it is easier for you, because not many people do it, to focus more on what could go wrong than what could go right. What do I mean? Well, look what's happening right now with the tariff war. What's going to happen? The tariff war is going to go wrong. Yeah, but it's not going to be a very bad thing. So eventually it's going to turn itself around. And we know we cannot have a tariff war because the US and China need each other. And that's what you need to do. You need to wait for the opportunity and you make money the other way around. But if you're trying to look for the next AI stocks, you're going to overpay. You need, and this is where this channel is important, you need to find out what it is that is going to go wrong. You need to find the next black swan, which is something that never happens, and yet it does. And you need to find the next COVID situation. That's how you make the money. How do you think Michael Burry in 2008 made $500 million? He made $500 million by betting against the housing crisis. And they said he was crazy. And he said, what the heck are you doing? What do you mean? The market, the housing is great. There's nothing wrong with housing. How could you think about that? Right? So that's what you need to do. And of course, this is not an easy thing to do because nobody does it, because nobody tells you. And what do you mean by that? Well, nobody tells you about risk. If you go into all the major newspaper, or you go, check out all the social media finance channels, what do? They basically tell you this is how to make money and pick this stock and that stock. This is my best choice and my worst choice, and this is... Does anyone, I'm not saying they're wrong, I mean, some of them have some pretty good calls, but do they ever tell you the amount of risks that is involved? Right? If you open the Wall Street Journal, you open all these, you look at Bloomberg, where's the risk? Show me the risk. Where is the risk involved? When you're crossing the street, you want to make sure you don't run over, right? You don't cross the street because you want to get to the other side. Does anyone tell you where the risk and measure it? I want to measure it, how much risk is involved. No one tells you. And no one tells you because no one knows. It's a lot easier for me to tell you that 10% is more than 1%. You could understand that. But for me to explain to you a standard deviation, for me to explain to you the CAGR and the arithmetic mean versus a geometric mean, you're going to go crazy. But yeah, this is what hedge funds do all the time, and that's why they make a lot of money, because hedge funds make a lot of money, because not so much because they make more money, is because they take less risk, because they understand the risk. And I want you to understand the risk. I want you to understand what risk is, and you need to identify it. And then you need to price it. That's the only way to do it. So right now, I'll be very, very concerned. I would be very concerned, because actually the market is down right now, believe it or not. I would be very concerned by what's going on with the debt. Anything touching the debt, I'm concerned. Tariffs, not concerned. But if the tariffs impact the debt, that I'm concerned, because you're $37 trillion, that's impossible. Right now in Europe, in France, they are probably going to get rid of the prime minister again, and the president's probably going to have to leave office, right? Because they owe so much money, they don't know what to do, and nobody wants to make a sacrifice. So when is it that's going to hit the U.S.? We're not there yet, but you have to be careful, because eventually you're going to get there. I'm not saying this is not happening next week, okay? But you need to watch that, and this is what this channel does. Every day we come up with new things. They say, hey, look at this, hey, look at that, for you to understand what is going on, therefore for you not to make the mistake. And that's what it's about. It's about that. It's about the ability that you have to understand the risk. And the writer of the Black Swan, actually, Taleb Nassim, basically said, I get up every morning and I say the same thing. I get up every morning knowing that I don't know anything. Because if you get up in the morning thinking, hey, this market is going to go up, be careful. So what's the secret? Well, secret number one, watch out everything and try to understand and identify risks. Unless you're a day trader. But you know what? You get a 20% market drawdown and you guys are gone. So you need to be very, very careful. You need to understand very diligently